Okay, traders, today is February 1st. It is a Friday, 2013. It's midday, 12:30, 1 o'clock in the afternoon. We are looking at the Dow Jones Transportation Average. We're going to go look at a bunch of charts, and we're going to see where we should be positioning ourselves for next week. As you know, these markets have been extremely bullish lately. Very, very strong looking markets, and we're going to go over that. Likelihood is that we'll try to find ourselves in a long position before this day is over. But let's take a look at what's before us now. If you guys watched last night's video, you absolutely recognize I totally wanted us long for this day. Now let's go look at why we should be long for the next few days going forward. As we know, futures trading can be extremely risky and can cause substantial financial loss, and futures trading is certainly not suitable for all trading accounts. So if you do not understand the risks behind trading, you certainly shouldn't be doing any of that in the commodities arena. But for you traders that understand it, let's go. Here we are. Again, it is Friday, February 1st, midday. You're looking at the leader called the Dow Jones Transportation Average. This is a daily bar chart. As of last night, here's the analysis. Breached. Ugly. Not much you can do about that except for say, wow, you've gotten underneath that. If you get back into it, it's likely going to be a sale. But what happened today was a wonderful occurrence. Right back into it. Look at that. Wonderful. That's just what we needed to see. Now, what else is happening here? As far as I can see, we need to pull down this channel. It basically expanded. That's about all the channel did. Watch this. It just expanded itself, and now the channel is working perfectly. Okay, from what it was, it just expanded. I mean, it's a great channel. So it's not breached, and it actually held inside this channel. Very, very nice. I'm really glad to see that we are back inside that channel. Okay, traders, so Dow Jones Transportation Average absolutely looks wonderful here, right back in the channel, and you have to give it a round of applause for just coming down for 1.5 days and right back up again. Very strong, resilient market, something that we love to see, and it looks like we will be absolutely looking to get long the indices going into Sunday night through Monday, but let's look around. So that's the daily. Let's go look at the weekly. Traders, this is a chart I have shown you in many other videos and several classes. This is a huge weekly chart of the Dow Jones Transportation Average. Huge inverted head and shoulders. This big blue one is a huge, huge inverted head and shoulders. Its projection is much, much higher. So here's your right shoulder, the head, the left shoulder. Then you have the red ones, shoulder, head, shoulder, shoulder, head, shoulder. That's in the big left shoulder. Then you have an inverted head and shoulders right there in the middle of the head. Then over here in the right shoulder, you have an inverted head and shoulders, and this line represents previous highs. This has blasted off, and the projections are astronomical for the next year or two, based on this huge inverted head and shoulders, filled with inverted head and shoulders all throughout on your weekly bar chart of the leader, the transportation average. So we are looking at a long-term view. A long-term view right here is astronomically bullish. Let's look at another chart. Traders, the Dow Jones Industrial Average. This line represents where we were the last time we rallied, right? This red line's the previous high. We came down, came back up, blasted through the line, and have stayed inside this parallel channel. Now, last night, of course, it challenged the channel, came down through it, and popped right back up today. I should say yesterday it challenged the channel. Today it went through it and popped right back into it. So I am loving it. Another market right back into the channel. Right back to bullish. We are buying the dips, and that is that from what I am seeing so far, unequivocally. Then you look at the weekly. Look what happened to the weekly. This chart goes all the way back to 2009 lows, and we're in this wonderful parallel channel right here. Inside of that channel now is this blue parallel channel. Bottom, top, bottom, top. Little test to the top, came back to the bottom. This test of the top looks like it will not stop. This one is going because it's a little bit different. It's not a one-day blowout through the top. It's a very small day so far, and it started. Its low of the day is at this line. Let me reduce the line for you. Its low of the day is down at this line. That means it opened on the line and took off. That is powerful. So with that in mind, it looks like we are blowing out now of this parallel channel, which is the secondary parallel channel inside of the major parallel channel, both extremely bullish in your Dow Jones Industrial Average Weekly. Traders, this is a case for a much, much higher market. You recognize that, right? We should move much, much higher over the next few months into this year, 2013. Let's continue to move along. I want to change charts now. Here we are, E-mini S&P daily bar chart. If you take away where it was today, we removed today's action, and you have yesterday, you breached the channel, and your indicators are pointing straight down. You breached the channel, your indicators are pointing straight down. I can go through all the indicators, but there's no need. They're all pointing straight down. So when you get a set of analysis like this and your indicators are bearish and the market itself is bearish, well, I shouldn't say that. The indicators are bearish and this bar, this one is bearish because it pierced the parallel channel. You have to recognize it. Probably you're going to be calling a down day for that day, at least at the onset. Now, for me, I looked at it differently, and I went, this is 1 day down, 2 days down in a bull market. I want to go long, and you guys heard my video last night. But once I ran the Omni was pointing lower. As you can see, so are the technical indicators. And I said, okay, I guess I can't call for the upside, and went and found the reason to call for downside for the beginning of this day, and that would be this. Now, of course, the 2-day rule is in effect today. As we can see, the markets are moving higher when you add today in. So looking at this afternoon into Sunday night, we are absolutely looking to get long again this S&P. So being that we are back in this channel, I'm going to do the same thing I did to the other channel and simply expand it a little bit. Watch. I'm just going to pull it out here and say, I guess the channel has expanded, and now I will respect the new channel. And that's it. We are steeped in the channel anyway, and upward we should go. Now you extend. What you do is you extend your channel, and then you can see if there's an upward projection up there. Boom. So that's what we would expect, 1520 in the S&P, at least in the next day or two. So this is what's coming our way. I can't tell you to buy it right here. If we get a pullback today, we will absolutely try to buy into some kind of a pullback and expect this by Sunday, Monday. So S&P looking fantastic right here. Let's look at the weekly S&P. Traders, another chart I know you have all seen in many, many videos. I've been showing this chart to you for several years now. Repetitive patterns are the cornerstones of accurate technical analysis. That is unequivocal. It is absolutely true. What makes this work for us is that we recognize repetitive patterns. Something you've seen, and then you see it again, and you see it again, and that's the stuff that works. I mean, that is the nuts and bolts of technical analysis. If you've seen it before many times and you can count on it happening over and over again, if you put it in your repertoire of tools or your arsenal of weapons, I like to call it. So here we are. V pattern bottom goes into a parallel channel. Finally breaks the channel. V pattern bottom goes into a parallel channel. Finally breaks the channel. V pattern bottom, parallel channel. Finally breaks the channel. V pattern bottom, parallel channel. Finally breaks the channel. V pattern bottom. And guess what we're in now? The parallel channel. That parallel channel looks like it's got a long way to go. Look at this. We can easily end up here before we have any trouble running into the parallel channel lines. And who knows where they really belong. I drew this in, if you recall, when none of these existed. I drew this in when we were down here in the market, and I said, let me draw in a parallel channel and see what happens. And so far, we've stayed inside those parameters. So that's why I continue to show you this chart over and over again. We are in for more rally. The rally is not over. If we take just a simple line and go from where this rally started to where it petered out, you still have some time in this rally before it's done. And that's only if it doesn't want to continue. So I say repetitive patterns are absolutely the cornerstones of accurate technical analysis, and this is very, very repetitive. All right, Omniacs, here we are. The NASDAQ, inverted head and shoulders, has the little head test down here, turns into a bull flag, and the NASDAQ is about ready to explode. It's going to come out of this bull flag, and it's going to do this. You know, we should get a nice run-up out of this bull flag. I'm not giving the calculation exactly right here, so I'm not saying it's going to this level, but I will certainly have a calculation for you here at the site. If you come here Sunday evening, Monday morning, I will give you an exact calculation on the flag and where it looks like NASDAQ will go. But on the daily bar, this NASDAQ, that is unequivocally a big bull flag. Bull flags are bullish by their nature, and the likelihood is we start now breaking out of that flag and moving higher. There's your daily. Let's look at the weekly. Traders, look at this weekly. Does it get any prettier than this? Look at this wonderful line. It goes all the way back to 2009 lows, the crash lows, and it has just been perfect. It bounces very smartly off the line when it hits it again, bounces very smartly, hits it again, and the bounce has just begun. The bounce has just begun. Let's see if we can qualify that. This last bounce was enormous in length. I mean, it just took a long time for that one to end. Let's even call this the first bounce before it cooled out, right? Look at the time on that one. Then it bounced again. We just began this bounce. We just began it. There is no way it's over yet. So be prepared for what's coming this year. Doesn't matter what the pundits tell you on television. It doesn't matter what you read on the internet. What you need to recognize is this. When a market starts at the bottom left of your screen and goes all the way to the top right, that is a bull market. It does not matter what anybody says or what anyone thinks. If your eyes see this, you see a bull market. And if you see a bull market, you should be able to tell people, that's a bull market. You need to buy big dips until you break something like this major red trend line. So we are absolutely unequivocally in a bull market. Next, we take it out to one of our leaders, the Russell. This market, I mean, wow. Talk about a strong market. And this is literally just beginning stage 2 of a big, big move to come. Now, I want to show you something very quickly. If I can make this fast, let me see what I can do here. All right, good. I'll make this fast. All right. This is what we're looking at right now in NASDAQ. This is exactly what we have in NASDAQ right now. Russell's been leading the way. Let me make this yellow for you. We have this in NASDAQ right now. Okay. Do you remember what happened? Now, watch what should happen to NASDAQ because I'm going to now put the days back in. This is the Russell daily bar chart. That's what happened after the bull flag in Russell. Now we're right back into this channel, and we look fantastic. So traders, now that you've seen what Russell will do, well, what Russell did do after its big bull flag, that's what I'm expecting at a NASDAQ. That's why I showed you the NASDAQ first. This is what should come our way. Now Russell's back into this channel, and Russell looks fantastic on its way higher. Weekly Russell, look at this. This goes back to the 2009 low. Wonderful, wonderful parallel channel we're in. This represents previous highs. Look at how far ahead Russell is of its previous highs. This market is not stopping anytime soon. It is pointing us straight up, and that's where I expect us to go. Boom, boom, boom. So longer term view, not for day trading now. Where are we going into the future? And certainly, because we're looking at it weekly, and certainly the daily charts are telling us where we're going Sunday through Monday. In the future, we're going at least up here, 984, maybe as high as 1025 in the Russell. For the daily, you know, you're looking at 920 without much trouble at all. So short term, Sunday, Monday, very bullish. Longer term, the next few months, weeks ahead, yes, there'll be some turmoil. Yes, there'll be some pullbacks. These markets are extremely, extremely bullish. Let's go look at another market. Traders dollar index on the daily. Left shoulder, head, right shoulder, the breakdown begins. This stuff is like magic if you read it correctly. So here we are. The downside is beginning. Looks to me like it's now creating some kind of a channel. So we'll put one in and see if it stays in that channel. The dollar moving lower pushes grains higher from time to time, not always. Pushes some, so it'll push commodities higher, but what it really pushes higher is the stock market. Because commodities are supply and demand. So sometimes a weak dollar and weak commodities go hand in hand. But the stock market and a weak dollar are usually perfect opposites. The weaker the dollar, the quicker the stock market gets propelled. So this is more of a case to push up our stock market. Let's look at the weekly dollar. You've seen this chart many times, traders. This is the dollar index weekly. And if you recall the last time I showed this to you, I had a note down here. And the note said it's not a matter of if the market will go lower. It's a matter of when. Does anybody remember that? And the last time I showed this chart, that's what this note said. It's not a matter of if we're going down. The question now is when. Because we have an upright head and shoulders with a bear flag. The bear flag broke. It is time for this market to head lower. So the daily and the weekly in the dollar tell you that the stock market goes higher. Loving that too. Gold chart. If you've been following my videos, you might have recognized that I'm starting to talk about the possibility that gold has crested. That gold possibly has now finally decided to go, you know what, I think these may be my highs up here. I'm not so sure, but I think we may have crested. So I've been following the gold since I kind of got the impression from the charts that it's cresting. Gold has been coming off, for quite some time now. We're talking about September. Gold's been coming off since September. This is now February. It put in the first head and shoulders, broke down to a secondary head and shoulders, broke down again. Here's a third head and shoulders, but now we're starting to get below the 200 bar moving average. That's what this line is. Now we're starting to get below. We are starting to get below or test the 200 bar moving average. That will accelerate some downside if in fact downside is coming. Now, there are a few more. This is froth with these head and shoulders because there's an upright one here. An inverted one here. A little bit lopsided, but nonetheless, there's like an inverted one here. Then you go into the upright. Then you go into another upright. And, you can even eke one out of this right here if you want to do shoulder, head, shoulder and call this one. But we'll leave that one alone. This is unequivocal. And you got the 200. So gold is starting to show us a picture that if it continues lower here, it makes perfect sense. The fear markets start to go lower, and the strong markets that were in fear and panic in 2008 and a little bit of 2009 are finally starting to get some wind in their sails and move higher. So the fear markets, the panic is coming out of the fear, as you can see with this arrow. And obviously you can see with the S&P, the opposite is starting to happen with the risk-on markets. So you do have gold, and the gold right now is starting to look like it wants to possibly continue lower. I've got my eyes peeled on it. I would if I were you as well. Then there's this crazy one. I can't apologize enough for not getting us in here today. I zigged when I should have zagged. Anyway, I had a trade set up for us, which would have easily paid us back for our S&P today. And the trade was to sell this right here, at the top of the flag. It got there, things were going on. I didn't react. My fault there. And look what happened today. The wonderful thing about that is, too late to do anything about it today, but the bear flag is finally proving that it works, right? So with the bear flag bearing some fruit, Sunday through Monday, we know we can attack this one and probably have a very decent trade set up. Thank you, bear flag. So, all right, guys, you seen me try to catch this all week up here. I had my chance today. I didn't pull the trigger when I should have. And, all right, so we're watching it now. Good setup for Sunday night, Monday. We'll see how that goes. So that is, this is basically what I wanted to show you. I think we can maybe just go back one more time to the tranny. The tranny is very important to keep your eyes on at all times. It's not, you cannot take it day by day. You cannot say, oh, the tranny's up today. That means the market will go up. It doesn't work that way. But as an overall leader, this market has blasted off because look at this long plateau. See how long that plateau has been? You got a long, long, long way to go now on the upside because you've spent a long time inside of what's called a flat, F-L-A-T. And being that you've been in the flat for this long, you got a long way to go on the upside now. So the leader is telling us You can't listen to anything except for me. I am the market, and I am going to take you higher through most of 2013. Traders, that's my presentation to you for today. This is why we are absolutely bullish in the markets and why we were looking for the markets to continue moving higher throughout this month and next month. There will be some pullbacks. However, pullbacks will need to be purchased. Thank you so much for coming to today's class. And always remember, stops are in, emotions are out. Rock and roll and have a great weekend, OMNI. Thanks for coming. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.